Well, ladies and gentlemen, it's safe to say that we are all fucked. What's going on, guys? It's Matt, and the US economy is in some serious trouble. With interest rates still rising, ongoing international trade wars, and debt levels approaching alarming rates with the risk of defaulting fast approaching, the United States economy is digging itself a bigger and bigger grave. But fear not, because you can avoid all of these problems by just clicking that big subscribe button because it really helps out the channel. And with that, let's get into it. As you probably know, interest rates have been steadily rising for the past year now, currently sitting at about 5 to 5.25%. But what does this mean? Well, Mr. Powell and the Federal Reserve have been trying to combat inflation by raising interest rates for the past year. In simple terms, interest rates go up, people spend less, and inflation slows down. And it's sort of worked a bit. But it has some serious impacts on the US economy. Rising interest rates can affect the economy in a few ways. For starters, the cost of borrowing money goes up, so businesses that rely on credit or loans to finance their activities get hurt. Higher borrowing costs typically discourage spending, investing, and expanding, all of which slow economic growth. But it doesn't just affect businesses. It also affects people, like you and me. Higher interest rates means higher mortgages, higher car payments, and higher credit card interest, which means people have to spend more money on those things and have less disposable income to spend on things like entertainment, eating out, or whatever else you do for fun. A reduction in customer spending can really stall business activity and slow overall economic growth. For example, let's say your car payment rises $20. That's $20 less you can spend at Target, which is $20 less that they earn, which is $20 less that they can spend on growing their company. And just think of the implications when the exact same thing is happening to millions of people. Anyways, enough with this interest rate jargon. Let's talk about something a little more fun. War. Well, trade war. The ongoing trade and currency wars between countries like China, Brazil, Russia, the US, and gosh knows who else have serious impacts on the US economy. Trade wars disrupt global supply chains, increase cost and prices for businesses, and have triggered economic downturns in the past. For example, the trade war between China and the US in 2019 caused a loss of $12 billion to farmers, causing layoffs, bankruptcy, all in just the first quarter. Basically, anything with the word war in it isn't good. End of story. But wait a sec, you thought that was bad? I haven't even mentioned the $31 trillion of debt that the US government currently owes. Yep, that's right, $31 trillion of debt. And I know what you're probably thinking. Matt, who does the US government owe that much money to? Well, some of their creditors include financial institutions, banks, local and state governments, and foreign governments. I mean, come on, can't they just give Joe a little break? The United States could default on its debt as soon as June 1st for the first time in history. Actually, wait, technically it's the second time. They did default in 1979, but that was just because of a payment glitch in the system, and it was resolved after a couple weeks, so that doesn't really count. So unless the debt ceiling is raised, the US could default. And you might be thinking, what does that mean? Well, it hasn't really happened before, so no one really knows what to expect. But here's a recent news article to give you an idea of what might happen if the US defaults. A catastrophe, worldwide recession, wreak havoc on American lives. Sounds fun, right? Well, let's just hope that Joe and his friends come to an agreement soon. You may be thinking that all of this seems pretty gloomy, and you'd be right. This is pretty ugly, but that doesn't mean you should be losing sleep over it. Instead, you should focus your time on things that you can control, like creating an emergency fund, saving and investing, and subscribing to me so that way you are prepared for the worst. Anyways, that's about all I have for you guys today, so until next time.